but I don't know what suddenly went wrong.
Okay.
Uh,
Now we can
as
start.
they say, technology is a little dicey thing. You never know when it works and it doesn't. So once again, welcome all of you, all those who have still been patient enough to stay with the whole thing. So we will continue. So to give you a background of what we were talking about is the whole idea of thing is wealth creation. The purpose of our intention to join into stock market is wealth creation. And when we join stock market, we have
Tejas bhai, your voice is not there. Please unmute yourself.
Unmute in mobile.
this is okay.
Now we can.
Yes.
Yeah, yeah. So we have two ways of making money into stock market. We hear so many beautiful stories about stock market, right from Rakesh Junjunwala to KDRs and so many people around. So we are actually interested into stock market to make a lot of wealth. So there are two ways of making money. One is through fundamental investing and the other is through trading. Trading is where you can make money in a very short period of time. The price goes up, you sell. The price goes down, you buy. That's a simple day. That you do it in a day, you do it in a swing trading in the form of few weeks to a few months, or you do it in the FNO. Make a big lottery, put small amount, buy a big chunk, and if it goes up, bingo, you are from one level to the highest level. This is almost like a small kids video game, but that is the biggest source of concern also at times. But that is the game of trading. There are experts who have made fantastic money out of this. The other fundamental thing is like a seed. You put the seed in, you let the tree grow for a long amount of time, and then you reap the fruits for the rest of your life. Trading is like you give the money, buy the fruits, kacha nikla to kacha. If it is good enough, you eat it. If it is very spoiled fruit, you don't know which stocks you picked up, that's your luck, if you do not know the science of trading. But having said that, this is the primary difference. That's how I understand. The fun of when you want to make money is when you do trading. Statistics say that generally people, the percentage of people who succeed in trading is very less. And that too, especially we got some reports yesterday in our stock market group that almost so many percentage, only 10 to 11% really succeed in making money, and that to 1.5 lakhs per the whole thing. So that's how the whole thing is very riskier. And we have seen FNOs really completely wipe off people's lifetime of savings and money. But fine, that is also one of the ways. You want to have it, you have it your way. The another way, which is fundamental analysis, but the idea is it sounds so boring, it sounds so, oh my god, yeah, there's no fun, there's no thrill in the whole thing. Trading is so much thrill. Kya lene ka batao, kal bech diya 10 रुपए के अंदर मैंने 1 लाख रुपया बनाया. That happens beautifully. So is it fun? Is the fundamental analysis work? That's the next point. And that thing is where, just a second, yeah, where I would like to share my story. So when I was never into trading, because of maybe I was not so much into keen into putting into so much attention every day into the screens all the time. So then I used to hear how to make wealth creation, and I ended up reading Robert Kiyosaki, and he was about about real estate. But in India, real estate is not a big wealth creator, at least as of now. So I checked out stock market, where we would hear stories of Astral. I hope any one of you who have heard Astral Polytech, please put it in the chat box, because there are so many people who don't even know about this Wipro thing making 1 lakh into crores of rupees, but not many know that Astral, if you put in 10,000 or 1 lakh rupee, 10,000 to 1 lakh rupee, you would make almost 45 to 50 lakhs in just 5 to 7, 10 years. We have lot many things to cover. Someday we'll talk beautiful stories. Based on that, when I started learning it, why I'm sharing this is, we feel, oh my god, those people did it. So are those companies, they are already into 2000 3000 rupees now, to abhi uska kya kar sakte hain? But let me share my own experience. When I started this, learning this from sir, Dr. Haresh Tulia sir, where he would really make me go through these searching for companies. He would encourage me to, bet on my own investments, strategies. I would invest into things, and these are the times when I use the screener, and we picked up a few companies. One of them was alkylamines. And guess what? In 2016, when I did my first so-called investment, I was investing for 20 years, but the so-called real knowledgeable investment into alkylamines, the cost was 400 rupees for the share. And it zoomed up to 800 rupees in almost 1 year or something. And I sold it off. I said, wow, what a money that I made. And then when I read the company's details once again, I realized that it is still worth staying in. I entered it once again at 1,000 rupees, and it went all the way up to 8,000 rupees. Today it has split into two, so now the stock price would be seen as 4,000 rupees, and it has come down correction wise. But from 400 to 8,000 rupees, 20 times is what I have seen. A person who had no idea of all this, what this wealth creation thing is all about. I have experienced it myself, and that is the biggest testimonial that fundamental analysis do really work. So why is, because this now seems very lucrative to me. Oh my god, if this is what you can do, and what do you have to do? Not sit in front of the screen, just see the annual reports once in 2 3 months, keep a little track of the company. That's all. Minimum fuss, minimum time spent, and maximum amount of returns. Of course, it's a high probability setup. Not every company that you bet on will really become this. But if your fundamental portfolio is good enough, then even if a couple of companies really fail very badly, your overall returns over a period of 5 to 10 years is far better than putting so much of time, energy into trading and doing this. So I am a big advocate of fundamental analysis because I have gone through the whole idea of alkylamines myself. And that is the biggest wealth creation ideas, which really encourages me to keep going on. Now, can everybody do it? That's the whole idea of, sharing all of this before coming to the screener, is that if I can do it, because I started from almost nothing. I had no idea of what this fundamental analysis is all about. So that is why this whole idea came up of the series of lectures. And you must have gone through the first 4 lectures of fundamental analysis. And that is the what has to be understood in fundamental analysis. The first point, what we learned up till now in all of these 4 lectures, all the fundamental basic rules, what is to be seen in the company, how it has to be evaluated, all those kind of things. Those are all the concepts, the theories. They sound good, but how to apply? That's the question. I am here, I have this amount of money. How should I go about using this money on the basis of what you're talking? That is exactly point number 2, is what you're going to learn today. Through the use of a tool called screener.in. Screener.in is how we can identify companies, evaluate it ourselves, and then put our money based on how much we want to put into each one of them. Now, the third point, beyond this, once you know that these are 5 good companies, 10 good companies, I want to put the money in. Say you want to put it. The third point, which I want to just briefly brush through, is the concept of valuation. When you put the money in, that's the next point, and that is valuation. This will be covered up in the future lectures, but I just wanted to know, you to know that it is equally important that you do not hurriedly put all the monies into a declining market and then really get a little crippled up. So the timing of the market, the valuation of what you're trying to do is what is also a very important aspect, along with other aspects like how much you should invest in each of the stocks, what all those things. So those concepts are still also a part of the investing strategy. So today we will first do the next step, and that is how to identify a good company. So to identify a good company, you can identify a good company based on somebody's opinion. Somebody says मेरे Reliance अच्छा है, किसी ने ये बोला आजकल ये बहुत अच्छा है, ये कंपनी का नाम सुना है, you read it in the newspaper. So those are opinions. But what we have taught you in the last 4 lectures is every company has clear cut figures on which you can give them and evaluate them and know whether they are really worth investing in. There are aspects of the companies which, as a common man, see, we are doctors. I have no idea of accounting whatsoever. And I probably believe all the doctors become doctors because we hate mathematics in the worst possible way. So we and I believe, I mean, I'm saying it in behalf of all the doctors, but whoever I have met, I think most of them really had this. So to understand a company, we have four major criterias, group of figures. For example, if a company is making a product, it is selling something, it will really have certain figures coming up. Say, itna mal becha, itna profit hua, itna expenses hua, XYZ, whatever they say in the profit and loss balance sheet and everything that you must have seen in the previous lecture, right? How to see the annual reports where they give all the details of how the figure went about, how the money went into us. How do we see that and which all to be seen? Because if you go by those things, it is huge. Everything, it has got n number of criterias, n number of things whereby you don't even know where to start and what to identify. So we have four major criterias, category of criteria. One is how much profitability it is making, how much of profit it is making. Second is how much liquidity it can do, means if it has to pay something, can it just produce some money and just give it away to that people who they want to pay overnight or in 3 days or 5 days? That is also a very good criteria for the company. The third is solvency. For example, if a company mein aag lag gaya, if the company has to really adjust their assets in such a way, can they, in a long term, or some big debts is, some big loans have been taken up, can they really pay it in the longer term? So that is the solvency issue. So these two aspects, profitability aspects, and the last one which we talked about, to some extent we will cover that, and that is valuation. That is the criterias. Under that, for profitability, we see something like earnings per share, the revenue, whether it has doubled over the last 5 years. Earning per share, as we have really learned this from Dr. Aresh Tolia sir, and he has really picked it up very well, which has been very helpful, which I would like to share with you. As the earnings per share has to be 5 times the face value of the share. I hope, I believe that you know the terminologies of face value, earning per share, XYZ. But if you do not, don't panic. Just go back, uh, see these terms, and come back and see this video again. I think that will make a lot of sense, because this is a lifelong video. It will be really helpful in a very long term for you. So we have all these things where paisa kitna banata hai company is the profitability. As we talked about liquidity and solvency, and the valuation is also a very important aspect where we have price to earning. Price to earning has been very, very much talked about for years together. It is definitely a very important criteria, but just one criteria is not important. Today we will see how to evaluate company in all different aspects. Some companies, we have a beautiful price to earning seen on the accounting sort of thing, and then ultimately the other factors are the biggest danger. So that's how we see. PB is price to book. Then we have interest coverage ratios, and another very interesting topic is the Altman Z score. Somebody has really devised a score to see whether, if this company in a future has a possibility to default, means completely go bankrupt, which probably in today's times we are really fearing one of the major companies in India. That, oh my God, what if it goes completely bankrupt? That's a fear. Ultimately, when people are really selling or doing things, ultimately back of the mind, that's a fear. So this can be also quantitatively underlined and understood, and that is ultimate Z score, which we will check out today. So that is where we can see whether this company will at least sustain for some time. So that is also part of a screening thing today. So these are the primary categories and the primary criterias on which we will see if the company, जैसे बोलते हैं ना, company खरा उतरता है कि नहीं. But out of these also, how to really start off. So let us zoom a little more and go to the next slide and see what we can the minimum use to start off to understand a good company, a fundamentally good company which has a potential to make a lot of money now and later, if everything goes well as it is going today. The idea is, one that we use, as I shared with you, is the earnings per share more than 5 times the face value. The second is debt to equity. The debt on the company is the biggest fear. As we once again mentioned, the same company which we talk about, and debt, when we take it, it's very beautiful. It is helpful to the company to grow, but the company, how it manages the debt, at what time it takes, how it is really resulting into the increase in the income of the company, all of those things are very important. And how are they capable of paying the debt? So debt to equity, that is a ratio. If these things or these terminologies are a little difficult for you, we can have a terminologies lecture also on that, and we will put it up. Second is, you can refer back to the previous videos and check out all these. They have we have already done all these terminologies also. So coming to the idea of debt to equity, on a statistical level, is supposed to be less than 0.3 for a company ideally, and that is a very good figure. If a debt to equity is less than 0.3, if the price to earning p ratio of any company is less than 15, is very good. If it is 15 to 30, it's okay, and above 30 is a little higher. This is a general rule. I have learned it from sir, is that the financial institutes have a little different criteria. For banks and the other things, there's a different P ratio range. And the second most important thing about P is, sometimes we use price to earning ratio of particular company as compared to that industry. We have an industrial P also, where it is available to us. We will see that in the screener part when we go to that. So that's the beauty, where if you can do this thing plus then the ROCE, as we discussed the other day, I think in the terminologies lecture, ROCE is return on capital employed. For example, if I'm putting in 1 crore of a rupee, how much money is I'm generating is the amount of return, the percentage of amount, a percentage of 1 crore that I'm returning is the amount that I'm getting in return to the amount invested that I. This is a very important criteria to see whether the company is really growing very well. And one more criteria amongst that we use sometimes is the ROCE of the last 5 years, whether this has been consistently going on or not. And that is a very important criteria to help us to know whether this company is growing very well or not. If time permits, we can see a few companies where beautiful, if you see, Sun Tele Networks or something, I don't remember, but that is what was there. Excellent figures, excellent statistics, but the same amount of that it is generating for the last 10 years. So there is no growth in that whole company. For the last 5 years, there has to be a return on capital employed, has to keep on being more. So that is the whole idea of how we evaluate the company. Now, ROC and ROE, that is what we saw the difference. ROC is a more stronger criteria to come to the company, because ROC also covers the debt part. Total कितना पैसा लिया है company में, and then उसमें से कितना generate कर रहे हैं. ROE only puts out the debt so that it is easy. इतना पैसा आया, वो debt part छुपा दिया, और then they show bigger figures. So that is what sir was saying the other day on the lecture, that ROCE is far more reliable than ROE. So that's what we will take, and generally it is more than 15 is a very good figure to have. And of course, at the end of it, in today's times when the whole market is really going nowhere and really every stock is getting beaten up, we would like to see whether the company survives. So if required, we will put in the Altman score, which I discussed the other just a couple of slides back. Altman score above 3 is supposed to be a very good score for not being bankrupt. I believe only this much is important for us. See, getting into any of these, iska kya calculation hai, kya hai, for me, frankly speaking, I don't get into any of those things. I'm a little, and I think everybody of a fundamental should be a little lazy type. Minimum काम में कैसे समझ में आ सकता है, that's what I think we should be able to do it. So if this criteria is what we start, frankly speaking, I'm not at all advocating that only these criteria should be seen in the company. What I'm trying to say is that make it simple and yet make it a little more comprehensive. That's the whole intention of doing it. We can add dividends, we can add market capitalization, we can have so many criteria which can be added. But to know whether it is growing, whether the bankruptcy is saved, and the earnings and the valuations are good. If this is balanced, that is how we can start off as a preliminary background to search for the company. Then jitna shakkar daloge doodh mein utna wo meetha hote jayega. So that as you grow in your knowledge, you can add on. But I think for a beginner, even this will be a fantastic thing. And even later on, why make life difficult when it can be simplified? So let us see. With this, let's begin seeing the screener. I think I will now share the screener part on the, I will stop here and I will show you the screener. Can I show my, yeah. I think this is good enough. How can I get this off? I hope everybody is able to see.
Yeah, we are seeing the screener now.
Okay, fantastic. I know there might be a lot of questions. We are not taking up questions as of now. So we can put up all together later on if possible, or else if there is any difficulty, we can take it up at the end of it. So we will go ahead, right? So here what I have done is I have already logged in, but what for you, what you can do is you saw, I do not need an app for that in my uh, computer or in my laptop or anywhere. You can directly go to the site and yet you can start the whole thing. This is how the home screen will look like. But even if you want, there are apps which I have installed in my mobile and it is very useful if you can use that. So this is how the whole screen will be. Now, the beautiful part of this is there are a lot many screeners available in different markets, right from ticker tape to everything else that probably you may be using it. For me, I started with this and it was very convenient and very useful. I recommend that you just learn the fundamentals, what a screener is useful for in any one of them. For example, if you learn today with me in this, then you can use those aspects of screener part anywhere in any other screener. So right now, just master any one of these, and then you can apply that to any other things. It will become easier. So to come with the screener.in, there are two aspects screener can help us with. For example, if we hear a company, say XYZ company, and we want to know whether I should invest. I have heard it from a friend, I've heard it from news, I've heard it from WhatsApp groups. What you can do is you can type up the company. For example, if you say, I want to know about a company called Sonata Softwares, right? So then you have a company called Sonata Software, and then it will give you to company details. Now I will take you a little faster through this because we want to go to the second part, which is far more important for us. And that part is, how do you yourself put in those criterias, the ratios that we talked about, and then get into good companies and a list of companies. That will be the most beautiful part of the lecture. So we will go through this a little faster and come back after we search for our own companies, and then we will do the same thing with our own companies which we have searched, right? So for that, for people who really know a few aspects of this, it is good, and maybe bear with us, but I think there must be a lot of people who may not know every aspect of the screener utility. So Dr. Vikram, can we help? Should we skip to the screens and how to search for companies, or we can briefly go through this?
Yeah. I think we can spend 2-3 minutes here and then we can go ahead with the final thing.
Perfect, suits well. Thank you so much. So now, let's keep it very easy and simple. So what are things we need? As I said, minimum things, maximum amount of utility out of this. So what you can do is, first of all, you can log in. That will give you whatever you search and whatever you save, that can be saved for the next time. Otherwise, it will be all lost. So you can log in. It is all free of cost. There are paid versions to this tools thing, but I think free of cost is far more adequate than for more than a regular investor also. So for every company, we have price, we have all those things here. We have ratios here. These ratios can be edited. And edited means, as in, for example, if you can select a ratio, you can filter a ratio, you can add a ratio, right? Or these are ratios which I have already added to my thing. So if I feel I want to, remove this ratio from here, if I remove, it will go away from my original screen. So here you have to save. If you save, all those two ratios are gone from my screen. So this is how you can edit the ratios if you need. A little rough overview of the company is given here. With whatever you know about the companies, you can get a little overview of this. Now this part we will come to a little later, because okay, this will be a little later, these two aspects. Now what we talked about was the sales revenue and everything. So here they give you quarterly revenue of every quarter, and not just the revenue, the sales, expenses, operating margin, and all those things which we talked about in the lecture on how to read a report of a company, the financial report of a company. So we see net profit, how is it going up? We generally see whether the sales are doubling every 5 years. That's one of the good criterias. Whether the net profit is going up, if the other income is already there. Sometimes what happens is the company's original income is less, but they tend to have put in other income, and then they show it a little larger, so that everybody gets an impression company is doing very good. So this is also one more aspect which you can check out of the company. Now that same quarterly, you have it here in the yearly thing, from 14 to 22, right? So that's how it is. Now here we have ideas of how it is. The sales have growth every year for the last 3 years, 5 years, 10 years. The profit has grown. The stock prices have gone up. How many it has given for the last 10 years? It has given 42% CAGR. CAGR is compounded annual growth rate. So for 10 rupees, you have earned 5 rupees. So next year on 15 rupees, you get 5 rupees. And then on that 18 rupees, you get 5 rupees. So that is compounding of CAGR. That's how the whole idea of CAGR is. A very famous story of a Raja saying कि आपको क्या चाहिए? तो he said कि chess के board पे पहले में एक दाना डालो, दूसरे में उसका डबल डालो, और वो 64 boxes भर जाए, उतना मुझे राइस चाहिए. The king said, what rubbish, go and give him. And they could not even fulfill it, giving the whole kingdom away. That's the power of compounding. That's how they say. And that is the compounding which we are looking out for in every stocks. That how much of the compounding returns is it giving? That is the beauty. We will come to that if time permits or in some other lecture. But this is a concept which is worth keeping in mind, and also referring it as your investment grows. Now coming to these parts which are not so good for any one of us who are not into accounting field, this balance sheet and everything, which we'll have to put in a little effort to see how much is the liabilities, especially, the assets kitna hai or liabilities kitna. Liabilities is something that the companies have borrowed from the loans, or it has invested into certain things. Abhi usme they have to repay. So those are the things which are the biggest burden. See, कुछ धंधा नहीं किया, घर पे बैठे हैं तो ठीक है, but if I have to give you something and certain people have to be paid every month or every year, those are the things which you have to keep a little watch on. That is what I believe, which you can find it here so easily. I think we can do a stock analysis of that one major company of India, which we are really worried about these days. So, and the second thing is then the cash flow. This is a very interesting and important aspect of any company. And sometimes even the valuation criteria are based on the cash flow criteria. For example, the famous investor Warren Buffett has a criteria which involves a lot of these cash flow. How much is the free cash flow in the company? That is how he considers. So there are formulas, there are ways to do it using cash flow. But cash flow is what? That is, as we say, operating, investing activity, financing activity. ये सब करने के बाद कितना रहता है? So that is how, once again, we'll have to go back to our drawing board and learn all these concepts and see whether we have understood, and this might not be the right time and the platform to do that. And the ratios, the most important thing is the shareholding pattern. Especially what we see is the biggest promoter holding. Ideally, the highest now the promoters are allowed to hold is 75%. So anything close to 50 to 75% is good, ideally. The more the better, towards 75%. But sometimes when you have a little lower this, then you have to be careful, because the hold of the company is not into the promoters who started it. So then the company may not really be in that position to be done by the promoters themselves, on the philosophy of what the promoters are doing. So you have to be careful how the management is running the company, and this is also very important criteria. Second important criteria is the FIIs. The FIIs are foreign institutional investors. They play a major role. DIIs are domestic institutional investors like LIC and the other things, and the mutual funds houses and other things. But FIIs are a very, very big major flow and a major kind of player into our thing. So when they increase a stake into the company, means they are seeing a lot of future into these companies. So we'll see that in one of the companies when we come to. Second thing is, when I said I have to track the company, how do I track it? We read the annual reports. So these are the annual reports which you can, very easily at a click of a button download and read it. This is as simple as that. But you have to make a habit of reading it at least once in 3 months. Somewhere where you have put in a little money, you should put in a little heart too, I believe. So if you can put in a little heart and brain here, every 3 months, every few months, every sometime, it's like, rearing a big baby, a small baby. If you don't pay attention to how much it is getting nourished, how much is really getting is growing, how much is its height growing, then it's no use having a baby at all. Your investment is your baby. It's going to give you, it's going to be the next thing which is going to take care of you, like your own baby takes care of you when they grow up. So this is how we have to see the investment in the fundamental analysis. That's my view. Others' view may differ, but this, I believe, is a very helpful view and very enjoyable view if you have that with you. And let me tell you, that doesn't mean that you have to be married or something. Even if you're single, you can see it as a baby who can take care of you, right? So ideally, this is how we have to just be brushed through the whole thing. From here, we can go back to the home screen. Now in the home screen, we have a direct company also given here, and we have the paid version things. So I have completed the premium thing, which I don't think is very much a great thing to happen to help us. Now, coming to the second aspect. So I believe we have gone through the first aspect a little faster because we wanted to come to the second utility of screener, which will be far more important than the first part, and also that it will also incorporate the first part. And that function is the function called this screens. Right? Now, what is this? Now understand this very well. First, understand the concept of what a screen is. Screen is where I say, as we discussed, we saw the criteria which we have zoomed into: the debt to equity, the P ratio being less than 15, X, Y, Z, and then at the end of it, ultimate score. So when I want to know if I have these criteria as of today, which are the companies which are fulfilling these criteria? If I can get, wonderful, isn't it? Because these are the criteria on which I want to select a company. And if somebody can tell me a list, I can then go back and read those companies in the context of how we saw it in the first phase, the first part. Isn't this very exciting? It was for me, because till then, you would always want to search for companies based on somebody saying it, or some reports are good, X, Y, Z. Here we are being very quantitative about searching of a company. It is not just haphazard one or two criteria here and there. It's a scientific, systematic, calculated method of searching for company. Now let's see how we do it, right? So what I have done is I have put the same criteria here, and let me just do that, right? So if you put this, which are our criteria, earnings, if you can you see this part?
Yeah, we are able to. Can you add few more? Then it will be much easier.
Few more what?
Few more criterias. How to add those
No, that's the whole idea. That's what I'm trying to tell you. That see, for example, we selected those 4 or 5. We decided that these are the 4 or 5 criteria on which we want to first initially see whether these which are the companies which have these, right? So you type those criteria. So what you can do is, for example, we can have, for example, a new screen where if you put on the screen, just a second, I will do it again.
Yeah, somebody has asked to put a market cap also.
That's what I'm saying. Let me come to that. You can add as much sugar as you want.
Yeah.
But let's see the beauty of this. I want you to see this first, then we add market cap, then we add other 4, 5, and see the difference how it is making up.
Okay, right. Okay.
That is what I'm trying to show you, that when something is done with for certain criteria, it will suit certain people. If you put up a market criteria of market capitalization, it will suit another group of investors. So that is where the beauty lies. That is why specifically I'm starting with such a small thing, which is the minimum which we generally start with. I hope we'll come to that. In case if still it remains, we'll answer that and address that, right?
Yeah.
So
okay.
having said that, yeah. So having said that, if you have a, say, for example, a screen, and you say create new screen, right? So it will come like this, and there you can type earning per share more than 5 into star means times into the face value. Face value ka symbol is FB. This also you can put it up as pura, but we have तो earnings per share उसका तो directly ऐसे ही देते हैं, otherwise इसका पूरा दिया है, हाँ? And then if you want to add another criteria, you can say and then you say debt to equity. So this debt to equity is less than 0.3, right? And then you add the word A and D. And what is the third criteria? Does anybody remember it well? ROC का full form क्या है? Return on capital employed. Now the beauty part is, if you see this, if you see the list, it gives you return on capital employed last 3 years, 5 years, 7 years also, and 10 years also. So that is where you can, play around. That's the fun that I wanted to show you. That it does not mean that these 4 criteria that I have shown you, so every time you have to put in those only. While you keep doing this, you will explore newer things. You will try this criteria putting in, you remove that. That is what you have to do it yourself. You seeing me doing it is no fun. You start doing it and you will be addicted to this, and you will need nobody, no lectures under the sun. You will start giving lectures like I did. I was a basic simple student who wanted to make a little wealth creation. Today I'm taking lectures. I have nothing extraordinary about it, just that I have practiced it a little few times. That's all. So if I think anybody can do it if you have a little, hands-on training on this by your own self, which also you do not need anybody else. So this is the whole fun of this, right? So we can check out various permutations and combinations. You can put these 3, 4, and then these 3. Then you can remove 2, 3, and then see which remedies, which companies are coming up, and then study all those companies and see which one of them you find is good. That's the fun of this game. So when you say right now we'll take return on capital employed more than 15, right? And what is the another criteria? PE ratio, the price to earning. So you can type price to earning, or you can directly type a PE ratio less than 15, right? And what was the last? Ultimate Z score more than 3. So when you run this query, P is somewhere we price to earning के लिए क्या word है? Okay. Sometimes it does accept PE. I don't know what's really wrong. So we can see PE. Okay, fine. Let's see this. So if you run this, we have 2 pages. So here it shows that there are how many number of pages that you have full of companies, and you have 94 companies as a result of what we have come up with. Now, before going into the companies and understanding of this, what I suggest is that we go through the tabs here. So we can, index it through the industry, or we can export this whole thing which we have. We can put it onto an Excel sheet and get it onto our computers, and we can use that also, right? I hope it is. Yeah, just a second. I'll take the screen here, and you can edit the columns. Now, the beauty of editing the columns is that when you edit the column, you can, for example, if you say fine, cancel this edit. What is editing the column? These are the columns which I have chosen. These are the things which I want to know about the company, which we have searched through the criteria. So you can add market capitalization. You can have other criterias. We can have things which are out of this. Current ratio or XYZ, anything for that matter. I have almost put everything that we have talked about. I've not put Altman's score, so probably we can add on that. But I wanted to have a little comprehensive view of what is the P, what is the market cap, what is the dividend, the profits, earning per share, debt, and intrinsic value. This is also one more very very interesting thing. This is about the valuation. That according to what we talked about, at what value you are buying a company. If a company price is right now 1,000 rupees, is the company worth 1,000 rupees? Sometimes it is lesser than that. So it is called overvalue. But in this case, for example, if the company price is 29 rupees and the intrinsic value according to the screener's criteria is 403 rupees. So this we are getting it at a much reasonable and lesser rate. So this is also one criteria which helps us. Let me tell you, not any one criteria should decide our company selection where we want to invest our money. Now, another thing is like what we are doing. I made my 6 criteria and decided that this is how I will evaluate. There is one guy called Poitrotsky. He made his own screening, and that was so clear cut that we use his scoring method as one of the criteria also. So we call it as a Poitrotsky score. Out of 9 criteria that he has given, how many criteria is this company fulfilling? So for example, this first company is fulfilling 6 criteria. The second is fulfilling 8 criteria out of 9. So it must be so highly valued and highly, higher on the charts. So now we see that we have 2 things. Intrinsic value is so good, and the Poitrotsky score is so high, and we have so many other criteria to see whether this company is worth it. So this is how, just as a glance, we know, it is giving dividend. Yes, it is giving almost 8.37% dividend. And then we have the ROC. ROC more than 15 is good, and this is showing a whooping 254%. And the industry PE of the company is 1.06, and the industry PE of the industry is 33.87. So you can see the amount of massive growth that this company has the potential if everything else is right. Are you all with me? And I believe by this, everybody should be really excited. Oh my God, is it this simple to reach good companies so easily? I was, frankly speaking. It was not so easy to just get a good company at a click of a button, and that to just a few buttons.
Sir, can I interrupt?
Yeah, please tell me.
So I'm Dr. Vivek Goswami from Noida. Actually, I have seen your criteria, but there are a few things that I like to point out here. First thing, you are
Please tell.
taking a PE ratio of less than 15. The big
Mhm.
winners, they are never that cheap. If you're taking a PE ratio of less than 15, you will be only choosing the laggards. You will not be choosing the leaders, sir. Because the big winners,
Okay.
they
I understand what you're trying to say. Yeah. I got it.
एंड
The
सेकंड
idea
थिंग
is
इज
you're
जैसे अभी
absolutely right. Go on.
आपने जो स्टैंडर्ड इंडस्ट्रीज का वो दिया है, इफ यू सी द मार्केट कैप ऑफ दिस इज जस्ट 192.35. तो इतने छोटे मार्केट कैप में अगर आप उस पे आरओसी को देखेंगे तो दैट्स नॉट गोना गिव यू एनी रिटर्न्स. मतलब यू विल बी एंडिंग अप इन like a big mess if you are choosing just by these criteria. There are certain more things that needs to be added, and if you are actually
Fantastic.
looking into
Fantastic.
the
Yeah. Go on. You have some other point to make?
Yes, sir. Basically, what I'm trying to say is that you are doing a very good job in like teaching everything regarding the fundamentals. But everything of this sort is ready-madely available if you just go to the marketsmith and they have all the scoring there. And you don't have to do this, and you only have to focus on the technicals so that you have a right entry point. Because fundamental is just a one aspect. It's mainly the timing of the entry which matters and which kind of lead to a proper well generation. तो
Okay.
यहाँ पे थोड़ा सा मतलब आपका ये जो अप्रोच है सर वो उसमें
आपके
ड्रॉडाउन्स
सब
बहुत
पॉइंट्स
आएंगे.
वैलिड है. आपके सब पॉइंट्स वैलिड है, डॉक्टर विवेक, एंड आई अप्रिशिएट योर concern that others should not learn wrong things out of this. But let me just take one point at a time. If anything else that you need to add on to whatever you said, these 3 points apart from these three.
Only concern here my is the PE ratio I'm not comfortable with जो आपने लिया है. मतलब जितना
हाँ.
आप PE
Yes.
ratio को
Yes.
नीचे लाएंगे उतना chances हैं कि आप you will be ending up in the
Absolutely.
wrong
Absolutely.
companies.
Right. Why ending up in the wrong companies? Let's start it
Means
that way itself.
yeah.
When you say ending up in wrong companies because of low P, is one aspect which I think even you will have to refresh the idea of P, because I let me tell you very frankly, when you say low P में लेना एक high valuation, high अच्छी companies miss out हो जाएगी. I agree to that. This is done with a purpose, because the purpose is how to apply and make it simpler and give it a habit of trying to search for low Ps. Idea is, I'm not trying to say that this is the only criteria, as I mentioned even earlier. So frankly speaking, your criteria, we will talk about it as we talked about, market capitalization bhi isme nahi dala hai maine. So that's the whole idea. I'm just trying to right now
Actually,
teach how to
I
fish.
have raised this concern, sir, is
No,
because low PE.
sir, listen. What I'm trying to say is, here we are learning how to fish. Your concern is कि low P वाला लेना ही नहीं चाहिए, नहीं तो disaster हो जाएगा. I think that concept is not a very valid thing. I disagree, because of the factor that only one P criteria is not considered in the total evaluation. One thing.
So
Your
why
point is
I'm
valid. Your
Just a
point is
second. Just
valid. कि
sir,
higher
just
companies will
let me
just
miss
come
I
out.
in.
want to make one more point.
Yeah.
One more point,
Dr.
sir. फिर आप
Vivek,
comment
Dr.
कर दीजिए. Yeah.
Vivek, one second, one second. If we are going to discuss, probably we'll not finish this. Let him finish his presentation and probably then start discussing. The topic is something else and the discussion is going on something else. This
Exactly. That's what
basically,
I'm trying to tell you.
yeah,
Yeah. Here
this is
the idea is
basically
to
how to
teach the
screen a stock.
concept of screener.
We are not giving any tips here that what to do and what not to do. We are just teaching how to use a
Exactly.
screener. Okay.
Exactly.
Yeah, Tejas bhai, we can go ahead.
Yeah, thank you. We'll come back to this, Dr. Vivek. We'll really address all of these queries. Yeah. And I hope as we go about, your questions will really get answered, because I am not saying that this is the only way to do it. So let's just continue with that. Idea is to add on to as many as you want. You can delete them, you can have only few of them, or you can have a little more of them. But the idea is it zooms in from 5,500 companies to at least 94 companies in one of the aspects. I do not say you start search, you start reading all of these companies, you may find only one or two companies work, then drop the whole thing. This is exactly what the doctor was mentioning, that you can then put up a P, because see, idea of PE or idea of any other criteria differs based on even the industries at time. So the whole idea is, in some of the industries, some of the criteria will be entirely different than the other things. So those things we will, as you go about, you will get to understand. The simplest way for me to start teaching screener would be as he probably wanted, or maybe is the safest, because the security part is market cap इतना बड़ा होना चाहिए, उसका past history इतना बड़ा होना चाहिए, इसका ये सब बहुत इतना अच्छा होना चाहिए. If that is how the dividend percentage should be high, if those are the things, if it 100% dividend दे रही है, नवरत्न companies आएगी which are government companies, there is very slow growth. So that is one of the ways that you approach your investment. If you are looking for that kind of companies where your money is very safe, you want to put only safety criterias, then you can go in with those kind of things. And he is right in a lot of ways, because when a company grows very beautifully, it has been generating a lot of wealth creation. You will never get it at a lower P. So you will never get Pidilite Industries into this. You will never get Astral Industries into this. You will never get any of those industries into this. I completely agree with him. But the idea is how to do it is the first thing we are trying to learn. Second is, I personally want to share, as I rightly said even before, that I have picked up alkyl amines at these stages of the company. This is also one of the beauty of doing it in this particular way, that sometimes you get such beautiful pearls, because any company, for example, Astral also was once upon a time 20 rupees with a P of less than 7, 8 or something. But at that time, where there are indications of it becoming multi-bagger, we have a possibility of choosing it here. Having said that, this is how we go about. So let's go a little further. So one step is that where we get all of these list of companies. Now, having come to this, you can start alphabetically, or you can arrange it according to what criteria you want to do. For example, I say, out of these things which we have searched for, I want companies which are, say, giving a very high dividend only. Then I can click on any one of these criteria and it will arrange the companies according to the criteria. For example, if I click it once, it says it is above, means from highest to the lowest in percentage. And that is, for example, Hindustan Zinc is giving 14% dividend. This company is giving 13.63. NMD is giving 12.38. And as you go down, it is in the descending order. Similarly, any of these criterias, you can click it again and you can do it in the ascending order also. For example, from the lowest to the highest. For example, these are the lowest which are not giving any dividend to the highest which are giving the highest dividend. Right? This you can do it with any one of them. For example, I want only highest market cap company, or say lowest. This is lowest. This is highest market cap. Again, Hindustan Zinc, Hindustan Aeronautics, NMDC, Oracle Financial Services. Only these kind of companies will come. So that you can start studying, and that you can put in. That also is how we do it. For example, we see the lowest P or the highest P, whichever way you want to see it. This is how I believe. And for example, one of the criteria could be, as we said, ROC. If it is returns are giving very well, then this is how we want to see it. I hope till now everything is clear. Anything else that probably we want to put it on the chat? I want to add something. Dividend is bad in long term as you lose compounding. Okay. Anything related to the learning up till now, which is okay up till now?
Yeah, it is fine. Please go ahead.
Is it going good? If you can, some of you can put it in the chat so that it is a little clear that you are with me on the same page. Some of them are putting it. Great. Yes, I'm happy to know that people are learning it. Okay. Good. Okay. All right. Fantastic. Oh, great. It is much better a response than I thought. So I'm very much happy that the learning is going through. That's the beauty of this whole thing. Fantastic. Thank you. Thank you so much for a good response. And now we'll go a step further. So in here, whatever criteria you decide, whatever you think is okay with you, you can put up the criteria, you get a list of company. Now the next step is what we did in part 1. Say for example, standard industry. Let us do it that way here itself. It's a small cap, as he rightly said, 192 crore company. It will have its own problems of having a small cap, because when you don't have so much of, when you're just in the beginning phase, when you have a small baby, you definitely have a chance of getting too much infections. You have far more lesser immunity. It's very natural. whether it is a company or a baby. The same thing applies here. But every company, if it is small cap and if it is really performing well, that is the time to enter. I started with this is because of this, that sometimes, you never know, 5 years, 10 years later, we might sit here and say, oh, fine, but that one day we saw this company, but we thought it was too small. Here it is, just thinking that it is too small should not scare us, because we should be able to see whether it is worth it. That's the beauty what we are trying to see today. And that is where, if you see, if it is current prices, well, 30 rupees, the highest low, the dividend is higher, whatever, for 5 rupees, it should be, 5 times the earning. That is 5 fives are 25. It is actually fitting the criteria. The ROCE of the company is 254%. The price to earning is lower. The promoter holding is lower. So this is one thing which is a little concern for this company, that you have to be a little careful about this. And this is a very important criteria which missed out on saying, that how much has the company pledged. I am a promoter, I have 75%, but if I need money and I pledge it, I put it in the bank, girvi rakha hai, then that is not a very good criteria for a company. Because pledged shares may really have a little difficulty in the solvency issue and the debt problems. So that is something which you have to be very careful if the company has a lot of pledged percentage. Such companies are very risky, and we generally don't tend to invest into that. So with this, if we say the company's price is 30 rupees, the intrinsic value is 400 rupees. Seems to be a jackpot almost. If the other things are, we do not get very excited and just enter into this. We see all the other criteria. So Altman score is 8.53. But this small cap also, it has a little strength of its own to not have a bankruptcy even at this stage. So it's a very encouraging sign. I don't mean to say that it is good. So debt to equity is good. Now, coming to this, screener gives you an idea of what are the positives and not so positives about the company. So for every company, you can go and read through that. Now, if you go through the quarterly reports and the profit loss, so if you see the profit loss statement, the sales from 10 has gone to 446. This is business. They are growing. It is not just somebody making fake news into the news channels. This is growing business, which we can see profits going from minus 42 in 2020 to almost 260. You have to see where is it coming from, and that is where you have to read the annual reports to see whether this company has really started to do fantastic business. Then we are in for a company which has just started to grow fantastically, good and great. This is just an example. This excited me, so I wanted to share. I don't mean to, let me put up a disclaimer that I do not recommend any companies to be bought. And if any one of you does this, it is your sole responsibility. Here we are here only to teach you the method of searching for companies and how to study them. It is not to recommend or pick up any company from this. If you do that, do it with responsibility, right? So we'll go ahead. So the profit has grown, the net profit has grown, the compounded things have grown, the balance sheets are better, the cash flow is getting better in the operating margins. And the most interesting thing that I saw here in this company, when I wanted to share this as the first one, is that, as we said, FII has to be a very important criteria. And look at that. I haven't seen this in my last 6, 7, 8 years of investing. From zero to, they have gone to 38%. They've almost acquired 38% of the company. Isn't this a massive thing? So you have to really give it serious thought. I don't mean to say you go tomorrow morning and start investing directly, but these are the kind of criteria where you should give it a serious thought. This is something, man. 38%, that when an FIA goes out and buys, they are not used to just invest so much of money into a company. So these are the things which give you confidence about the company. Having said that, stock market is a high probability setup. There is a probability that it will go good. There is a probability that everything can be this way or that way. Nobody can be very sure that this is this way and that is that way. But there are definite rules. If we can do that and follow that, there are higher probabilities of certain things happening. That's the beauty of this market. So here what we are doing is just learning the rules of how it has to be applied, and so that we can have a do it yourself kind of a thing in stock market. My intention is at the end of the lecture, if you can start getting certain companies by your own screening part, that will be where I think the job will be done, rather than putting up saying that which are the good companies in this criteria, that criteria, this and that. This might need a little practice. This might need a little hard work, but it's worth it. Let me tell you. So this is the kind of things. When you see the financial reports and financial year reports, we read and we understand. And then we come to the most important part of this, for the company study, which we missed out in the first part, which I wanted to show you now. See this here. Yeah, so here, this chart is a very beautiful help that we get from at a very easy glance. Idea is, what is this chart about? These lines are actually the price, right? Because it is here, the tab is of price. Beauty is this price is for 1 year. Now that you can have it for 3 years, 5 years, 10 years, and maximum amount of time, whatever time the company has existed, right? To 6 months also. Now, another beautiful aspect, price is something which we can get it from so many things. And then you can have a 50 DMA, 200 DMA. DMA is moving averages. That if you somebody really has put a little attention into that, you may use that also. But if you don't know about it, forget it. Don't worry about it. The idea is the price is something, but the most beautiful part is where this is P ratio of the company. Now, as compared to the earnings of this, these bars are the earnings per share, EPS. Any of these are the earnings per share. Now, when I think a few days back there was a discussion in the group that we should have an average P ratio, and that is where the price should match. That is a beautiful concept which I think is very, very valuable here, because this is the median P. If you see the dotted line here, this dotted line is the median P, and what is the value of that median P? You get it here. Median P is 7.9, and what is the P right now of the company? It is 1.1. So when you have a P, median P means the last few years ka average P. Now the beauty part of it is you can have a P ratio ka average for 3 years also, last 1 year also, and see whether that's really gone. The earnings have continuously remained good, and the price to earnings have gone down because the prices have gone down. So this probably could be a very good bargain price also. At this point, probably 5 years back, when the company was not making any profit, or company was really making just some profit, and the price was this, that is 8 October 2021. At that price, 8 October 2021, 8 October 20, at this 15 rupees, it was not taking a risk at that time because the earnings were not good enough. But right now, even if the company is at 30 rupees, with this kind of earnings bars are very consistent. So you can seriously keep it in mind. I don't mean to say that it will never come down. You have to keep a watch. That's the beauty. This is very short period of a time, just 1 year or 6 months. We have 10 years where there are beautiful charts and beautiful things. We'll come to those companies also. Here, this was a very interesting concept. So I just wanted to share, because this is where we falter the most. We want to have a small cap company, but we do not know whether it is good, it is not so good. We just do it at the base of some tips or something. Here is the method. My intention of doing this was, here is a method by which even a small cap company, if you have found somebody saying 5 rupees ka company hai, 10 rupees ka hai, 20 rupees ka hai, is it really worth doing it? You will get it from here. There are so many such thousands of companies which will be waste of money. If none of these criteria will be matched. So you have to be careful and study it and see if you can get any one of these things. Rakesh Junjunwala bought Titan at 100 rupees, and then he made millions out of it. Frankly speaking, I bought it at 140, I sold it at 280. I had 1,000 shares. I repented today, because if I would have kept it, I would have made a lot of money. So that is where we can really be we're very observant if what we are doing. If the company is performing well, the earnings are good, we can do that, right? So now going back to the anything else about this that is remaining, we have other criteria also which you can apply. Sales, EV to EBITDA, price to book, market cap. So these you can use it as per your knowledge and your, but these are the basic things which I think we can really understand and do that. I hope it is clear up till now.
Yes, yes, very nice.
Yeah. Can you just type in this box to give a little feedback? How do I go back in this? Okay. Can you just type a little of, is it uh, okay with all of you? Yeah. Okay. So we have something like those kind of criteria when we put up, and this is what we get. Okay. Oh no, this is something different. Sorry. Yeah. So something like this, right? So then we put up market capitalization as the highest, we can have these kind of companies. For example, if you have Hindustan Aeronautics, I believe even this, for example, has a stock PE of 13.5, whereas the industry PE is 21.9. But the price seems to have gone very much high. So you feel, is it really worth buying it at this point? So that is what we will study, for example. So this is a little moderately high market capitalization, reasonably capitalization company. The price is good. It's at a higher level where all the others have corrected by 50%, 60%. So idea is it worth buying at this point, this company, or is it too high value? So the idea is, let us check out. The dividend is good, or 10 rupees, it is earning 175 rupees. Because everybody wants Tejas, the light combat aircraft, which Hindustan Aeronautics and the others are really into demand. So many other things that they are going to do it. And the intrinsic value is nearly 2000 rupees. So it is close to that. But the idea is it's a very zero debt company. The profit variability recently has started to grow because people have started demanding all these fighter jets and the other defense equipments all over the world from India. And that is why the industry P is 21.9, but stock is still trading at a lesser than industry P with a reasonably good ROC and the last 5 years ROC and a very high promoter holding. So this is good enough for us to enter into the study of the stock. And when we see for the last 5 years, the price has gone up, but how much is the earning gone up? It's good. The last 3 years earnings have been fantastically good, but right now it seems to be a little higher price, but it's correcting. So the earnings of the company, as we see the bars, is growing consistently. So this is a very good company. And as somebody rightly mentioned, probably we cannot expect this company to have very low PE, because right now if the defense equipments are so much in demand, it might turn around from here. And you will see that in so many such companies. For example, if you see a company called PD Light, don't expect every company to go to less than their expected median P, because some companies, if they are going very consistent results, they will never go down. Their own average P will be seen. See, it will consistently remain here, and still the price will grow up. If you see, it was at a very high price. It has never come below the earnings part of the whole thing. So most of the times when you have these kind of big companies, Pidilite Industries, So those who are really having a very good earnings will have a little different view. So that is where we have to see whether that is still good companies are also still coming down. Then that is where the average 5-year PE is of immense value. And the earnings bar as to the price to earnings ratio. This chart is one of the most beautiful thing and the most utility oriented thing in screener.in according to what I understand in Screener. So having said that, there are so many other companies which we can go to, but I believe from here we will take up a few other points. I hope it is okay up till now. Please type something in the chat box if people can do that. Right now, I'll show you. See, we saw some good things, huh? Wonderful things, very nice. Everything was matching very well according to what we wanted. For example, if we see this is a chemical company, it had very good, interesting things. Small cap, not so great, but price was okay. The ROE is good. For 10 rupees, it was earning 146 rupees. So I was very interested to see, oh, good. This is really making good things. And then when you see the earnings also, it was reasonably good. And as compared to the earnings, the P ratio is very less. But when you see, there is this whole idea of 100% pledged. This is sometimes till the time things go well, suddenly something happens, the economic crisis comes, and if they have to really do this, they are in big mess and big soup. These are the kind of pitfalls that you have to remember, so that is why we have to see every important aspect of the company rather than just seeing 2 or 3 things and becoming very much impressed by that. I hope this is very clear. Right? And then this way, I think we have a lot of other criterias that we can put up. That is the fun of it. Here we can have, as somebody rightly said, and market capitalization of more than, how much do we want to put, Vikram bhai? More than 1,000?
Yeah, 1,000 or 10,000 crores.
Okay, let's start with 1,000, 2,000, 5,000, whatever. Okay. In this case, as somebody said, big market capitalization companies will never have a very low P. So that is where we have to say, for example, 15 to 30 is a good P. Reasonably moderate P. Less than 15 is good, but 15 to 30. So if we put it any company which is less than 30, right? And then when you run this company, you will get a completely different set of this. And when you have a market capitalization criteria, we have Infosys, ITC, HTC, HCL. These are the companies which are on a higher bracket. They have their own advantages and disadvantages. So that is where we have to once again learn these companies and go through these companies. For example, out of this, we have a lot of information. Infosys, ITC. For example, ITC is such company, the sin stock, as they say, where the price is good, but is it right now worth buying when this is so much high? So when you see a 5-year earnings to the P, price to earnings ratio, it is marginally high priced as compared to the median PE of the company. But the bars, the earnings of the company is something which is very exciting. This has not gone down in spite of anything, and that is where this is one of the debt-free companies with a very healthy dividend payout and a lot of other factors. So this is how we understand and see companies. I believe I have given an overview of what needs to be done. about the company study. Now, going back to screeners, there are 2-3 very beautiful functions of screeners, that these are something which I have decided and I have made my own, which all of you can have your own list of these things. And when you do this, you will be asked one thing, whether you really want to publish it to the world or not. There's something, when you make this kind of screener, no, you will have a question at the end of it. You can keep it for yourself also if you don't want this to share with everybody else, or you can share it with the world. When you run this query, I think it should come up. This is one function I wanted to show. Run this query, show all ratio. When you run a fresh query, I believe that is where it comes up. So that is where you can or save this query, export this query, but you can also even keep it private and not make it public as much as you want. So that is also one beautiful function of this. Having said that,
Tejas bhai, can we start taking the questions, because there are a lot of questions coming.
just a sec, I'll just finish off in 2 minutes because I think the last couple of points and then we are done with the thing. So I believe I just wanted to show a couple of functions of the screens which are really remaining, and that is where we have popular themes. Somebody who is already very known investors, some people have done their own strategies and made their own criterias and put up. So we have things like Poitrowski scan. We have things like coffee can investing is what is really very famous these days. So you can have coffee can portfolio, like Saurabh Mukherjee has been a very big advocate of coffee can portfolios. So what is coffee can? Somebody has put in those coffee can investing criterias here and named it as coffee can. So you can do any of those kind of things also as a ready-made. That's what I wanted to show up, because there are beautifully, and you can have according to the price, quarterly results के हिसाब से somebody has done, valuation screens के हिसाब से somebody has done, popular stock screens, what are the other things, and you can have show all screens. If you do, you will have 500 different ways of screens which you can use. You have a Graham Bell's way of value investing, which is a very interesting way of investing. So we have Peter Lynch methods of investing, where we have these Peter Lynch criteria also. So these are the things where we can utilize this aspect of the screener, and I believe we can browse it through the sectors also. If you say you put on agro sector, you will get all the companies of agro sector. So I believe this is all that I wanted to say it from my side. Just a sec. Oh, did I come out of this? Can you see me now?
Screen is not seen.
Yeah. Is it okay now?
Yeah.
Yeah. So now to wrap it up, this last one thing that I wanted to show is, this is where I wanted to make it clear. What we saw today is how we go about, and this is what we learn. So what we learned today till now in the 4 lectures, today we try to apply it in the screener and learn various aspects of not just the screener, but how to apply these principles and find out good companies and make portfolios. And as I said, valuation is something which we can take it up further later on as a detailed part of it. And these are the company things which we talked. And this is what we learned, the summary of it, overview of it, of why stock market, two methods of using it, and how fundamental analysis is helpful, and how to use valuations later on. I believe that's all from my side. Thank you so much. And now we can take up questions. And I would request my teacher and my guru, Dr. Haresh Tolia sir, to be on board with us and oblige us with answering the question, because hearing it from him is one of the most beautiful things that I have ever experienced. So it will be great if we can do that. And we will, I think, Dr. Vikram, if we can keep it only to limited questions, take it up as an email if it is a little too late.
Yeah,
I leave it to you.
yeah.
So yeah, with that,
Yes,
I
somebody
would,
was asking significance of median P. Actually, you told that thing, probably he did not get it.
right. So it will come as you start. Maybe you can hear, go through the lecture again and see it how it was applied in a few examples that I gave. Otherwise, you'll have to go back and read the median P theory of how it is derived, the whole thing. But I showed you how to apply it because we had already discussed it in the group some days back.
Yeah.
So frankly speaking, it will be a little difficult thing because it will be a little time consuming thing to explain it. But to
Mhm.
summarize it, median means it is an average. For example, if you say 3 years, what is the average price to earnings? And that line indicates the average out of those 3 years. So when you say 5 years, median P means 5 years का average कितना price to earning था, उसका जो average होगा, then that line may be a different than the 3-year-old P, right? I hope that is a little clearer a method. But median P is something which probably gives you an idea. For example, if I am earning 1 crore per year, then from that is, if I'm earning 10 lakhs in the last 10 years, so my median average earning would be 50 lakhs per year. Are you with me? From 10,
Yeah,
I may go to 30, then someday I may earn 60.
yeah,
Then I may earn 30,
we
40
can
again.
give an example of DMAT like stock, like which was going about 100 for last 2-3 years. And initially it was very low, about 40-50 BMI 5 years back, 4 years back, when it got registered on the stock exchange. And it went up to 200, 300, something like that. Now it is the rates are averaging, and now it is coming back to its 5 years average PE. So now you
Yeah.
can start thinking that if you want to buy this stock, then probably it has come to his 5 years
That
average.
is the utility of the median P. But
Yes.
what he means to ask is, what is the median P actually about? I believe that's the
No,
question.
no, I think he wanted to ask you what is the purpose, like why do you
That's
want
the
to?
purpose of it. Okay,
Yeah.
yeah. So ideally, a 5-year-old median P is a very good criteria to follow. But as we discussed, one criteria is never going to be the only way to approach the whole thing.
Yeah.
I
Because
believe,
if the PE is coming down, probably the business is also coming down. You never know why the PE came down.
no. If the earnings are going up and the price is
Yeah,
coming down, only then P will come down.
right.
So business and the earnings is something which we have to be very, very diligent about.
Right.
I think that is how we can do this. Can you explain chart interpretation? Chart interpretation in which way, sir? You can just, yeah, I think from here we have all the questions almost answered except for this chart interpretation. I believe it's about the P ratio and the earnings per share wala chart, if I'm not
Yeah,
mistaken.
EV, EBITDA and all, they wanted to know that. Yeah, Vimal bhai, what you want to add in 1-2 minutes, if you can tell us.
Hello.
Yeah, Vimal bhai, go on.
Hello. Good evening. I am audible, sir.
Yeah, we can hear
Yes,
you. Please.
Okay. First of all, very wonderful presentation, Dr. Tejas, sir.
Thank you, sir.
And I am one thing I want to add, Dr. Vivek. Okay, there is the PE expansion is must before we cannot the price appreciation in share bazaar. For my detailed knowledge, there are 3 criteria for share appreciation: PE expansion, growth expansion, and profit expansion. If it is, if you bought someone 100p stock, then the 10 times P expansion is already done. Now you have to bet on growth or profit expansion. So you cannot get the entire bucket. And one last point, a screener is very wonderful website. Sometimes you cannot get everything that credit report or con call reports. So you have to go search on website also. That's one minus point also is there. Okay, sir.
Sir,
Right.
can I make a
So,
point?
at that point, I would just like to add that definitely what he said was right. We have NSE and BSE sites which are beautiful and money control sites which have fantastic possibilities and information. But this is where we wanted to learn how to utilize that and make the most out of it.
Yes, yeah,
Thank
no,
you,
no,
sir,
yes,
for
sir.
the feedback. Yeah, thank you
It
so
is
much.
a okay, okay, thank you.
Right, thank you.
Okay,
So
My
I
only
somebody else was
concern,
saying that.
can I make a point, sir?
yeah, please. With 1 minute, last point,
Yeah,
and then
I'll
we'll
just
close.
take a minute.
Yeah.
Yeah, the only point why I raised a PE less than 15 is like if your PE is less than 15, so either that company hasn't started moving or it is in the phase 4 markdown. So if it is in the phase 4 markdown, initially it has a higher PE, now it has come down, it is a disaster. We will avoid going into this. Yes, we can catch a good companies in the initial stages of their development, but then we have to wait for long. But for value investing part, it's good. For momentum investing, it is not a very good idea because you have to wait for quite some time to get a good returns out of it. So
Sir,
that
you
is why
can,
I was,
sir, you can get the ITC chart. It's available at 15 almost P and now is 28p. That's the beauty.
Yeah. Now I
It's
think I
Can
think I think we can
Haresh sir,
stop.
can we invite Haresh sir? Can we invite Haresh sir to answer if he can?
Yeah, Harish sir,
Vikram
if
sir.
you're there, can you make a point here? I think he's not there. And
Okay,
we are almost 2 hours now. So
fantastic. So
yeah, Tejas
yeah.
bhai, it was a very great presentation, and we had a record audience
Oh,
today. And
yeah.
I love,
After 2 hours also, though so many audience are still remaining.
yeah.
So it talks. But I would really. I mean, I'm happy that glad that you say that. But I
Mhm,
want to really mention that the amount of interest that the group and the whole group has taken, as well
mhm.
as the amount of effort that you have taken out of your busy schedule and arranging and doing this for all the others is really commendable. So thank you so
No,
much,
Tejas.
group,
Yeah.
as well as both of you and
Yeah.
of
Thank you
course.
very much.
Yeah.
And for the members, I'll just announce that we'll upload this whole talk on YouTube. And if possible, Tejas Bhai's old presentation, if he permits, we can put that also on our YouTube channel, that when to exit a stock. It was a beautiful presentation from which then I came to know that this group is there, and
Okay.
we can take their help in knowing the understanding the fundamentals.
Yeah,
Okay.
yeah, we can do that.
Ye-
Exit policy, I believe,
Yeah,
exit
exit
and
policy.
entry.
Yeah.
Yeah, that is lecture which we had delivered.
Yeah.
So
Chalo
sure.
then,
So thank
Tejas
you so
bhai,
much.
thank you.
Thank you so much, sir.
Yeah.
And thank you
Okay.
everybody for a wonderful audience. And I really enjoyed delivering the lecture as much as people have arranged it. And thank you so much, everybody, from the
Yeah,
bottom of my heart.
Vaishali is asking YouTube link. We have shared it on Just Talk WhatsApp group. If you're not there on Just Talk WhatsApp group, you can send a message to us. We will add you there. Okay. Thank you very much and good night, everybody.
Good night.
Yeah.